Hello everyone, it's me the Boss Hog and we're back for another video updating on our portfolio and how we're doing in life in general. I would say overall we're doing okay, and we're going to talk more about this graph very shortly, but this is how our investments have been performing over the last nearly 3 years against our preferred indexes. So I'll talk more about that very shortly. Pretty positive week overall. Let's do it. Okay, so in terms of transactions I've done this week, I'll start with the dividend, just the one, although it's a pretty decent one. So MPW, Medical Properties Trust. Honestly, I'm more than happy just to reinvest this, and you can see it's down there as well. Again, I'm still not really subscribing to the bear case about this. I think it still looks very cheap, to be honest with you. So even though I'm down sort of 40%, I'm still using this as an opportunity to continue to average down. The big change this week was I decided to sort of simplify my portfolio and take some profit on about 10% of my Genius Sports position. Basically, I had Genius Sports spread across two different accounts, my general investment account and my wife's ISA. I had a much smaller position in my general investment account, and basically that's what you're seeing here. So I decided to sell this at $7.52. Didn't time it perfectly because actually it went up to $8, although it basically finished a week down at $7.50. It's an incredibly volatile stock though, and again, it's still not quite profitable just yet, but it had a big contract renewal and extension with the NFL, and it sort of, it seems to be more or less settling into the range between $7.50 and $8. Personally, I'm happy to sell at $7.50. I think that kind of is a fair price at the moment. I've been saying previously it should be like $6.50, but you know, assuming the results are reasonable and remain on target when they're published shortly, as well as the contract renewal with the NFL, I can see why you would add another dollar onto that basically, although that is quite significant. But again, I think the fact the market reacted in the way that it did showed that they rated it the same. So I still have 2,000 shares in Genius, but now I only have them in my wife's ISA. So I'm happy to sell this. And basically what I did with this £1,200 here is I transferred it over into my personal ISA and basically used it to buy a bunch of my mining ETF GDIG here. I timed this quite well actually, like it had a bit of a run toward the end of the week. I also specifically wanted to stay in USD currency. Like at the moment the pound is quite strong, so I wanted to sort of transfer USD to USD, and these were a couple of good choices. And then I sort of added also a couple of hundred to my consumer defensive there as well. And I've mentioned beforehand, I'm not a huge fan of consumer defensive, but I recognise that in the long term I should have a couple of percent probably in my portfolio at the moment. Again, I timed this actually relatively well in terms of the buying, and so I'm threatening to turn green on what's admittedly a very small position. By the way, before we look at the overall portfolio, I have no idea why Trading 212 decided to put this through in 5 different orders, but that's the way it went through. You can see even the USD price that I got in terms of the sell is exactly the same. So I'm not sure why they broke it into 5. I'm assuming it was just a reflection of the availability of who was buying it at the time. So yeah, so pretty interesting from that perspective. Again, we remain depositless at the moment. I haven't deposited for about 6 weeks, but again, I'm okay to basically be adding it to my offset mortgage, as I've touched on beforehand. In terms then of our week-on-week changes, pretty solid, honestly. You can see here sort of plus 2.5k over here, a similar figure for my overall P&L from Google Docs, and this is from my brokerage directly. A modest increase in our dividends here. This is actually really lovely to see this just creeping up over time, so that's pretty awesome. No deposits, and yeah, just a little bit here from the Google Docs position, again 2,500. In terms of the reconciliation, if we just scroll all the way to the top, you can see here pretty close reconciliation in terms of the profit between the two. I'm happy with these kind of differences. I've touched on this before, but there's sort of fractional differences between Google and Trading 212, both in terms of share price, closing, and FX movements as well. So as long as these two figures are materially aligned, I'm very happy with this. We continue to sort of struggle to keep up with the S&P. Honestly, it's almost, it is exclusively because of the FX impact. So I'm actually pretty happy with the delta at the moment. I think the pound is basically very flattered in terms of its strength at the moment, and it's purely because of the expectation that the Bank of England is going to have to raise interest rates, and because inflation is still so high. Like, I don't actually think the fundamental situation of the UK economy really justifies a kind of $1.31 to the pound. So again, my medium-term approach here is going to be to focus my investments in dollars, especially once I start investing again. I do have a roughly 50-50 split between pounds and dollars in terms of my investments. And yeah, I just believe that the pound is very strong at the moment, and therefore I'm going to use that as an opportunity to focus a little bit more on dollars. Nothing too extreme, just kind of nudging up the percentage of my dollar-held stocks over time. In terms of profit over time, we're not quite at an all-time high, but this is the second highest profit that we've really had. I sort of count these as sort of bull runs or maybe bull traps in sort of bear markets. So we've had sort of 1, 2, 3, 4, 5, and now 6. It'll be interesting to see whether there's any kind of breakout here, but I've kind of been pinging around. I am nearing my all-time high in terms of my US profit, and that's again despite the FX impact, so that feels really good. And again, my portfolio over time here, I'm hoping that in 20 years there'll be really big inputs into the blues and the purples as the dividends and the capital growth basically adds up over time. In terms of my performance this week, so I didn't have an amazing week comparatively. Like, you look at this and you see, a lot of positives here and many greens, which means plus 5%. But really, my Gamma did kind of okay at 1.2, and Genius had sort of a consolidation week. Again, this was running really high at over $8 for a limited period of time. But these being sort of a fairly top-heavy portfolio definitely weighed on it. Amcor was solid, but again, not enough to kind of counteract some of the kind of middle parts of my portfolio here. But yeah, broadly speaking, things moved in a positive direction. If I was to call out a few things here, I definitely saw continuing strength in technology. There was also a bit of a rebound from sort of mining and industrials as well. So I've got Huntsman here as well. Again, they were up a little bit more at one stage. Where are you? There you go, Huntsman. So only up 3%, but again, I'm starting to see a little bit of strength from some of the industrials, including Huntsman. And yeah, there was also an interesting house survey for the UK, so Redrow showed a little bit of life from that perspective. But broadly speaking, I continue to be carried by sort of tech, which includes Kainos and ASML as well. So feeling honestly pretty relaxed and not a ton more to add outside of that. I did just want to touch on this very briefly, which is from our thumbnail. So yeah, now that basically when I first started investing, my original plan was to basically see how I was performing over a 3-year period. That's actually going to be at the end of November, but I decided to kind of move into calendar years just to make my life easier. So, if I basically have a look at my discrete years and ignore December 2020, because that doesn't really count, this is basically how I've performed. And really, like, the 3-year period is maybe too short, but I also kind of wanted to make sure I wasn't doing too much wrong or basically massively underperforming the market. And actually, I'm pretty happy. I slightly underperformed the S&P, but have basically smashed the All World and the FTSE 350. So these are the 3 benchmarks I choose to measure myself against. I also thought it was interesting that I basically slightly underperformed to the S&P in good years, and actually slightly outperformed the S&P in the bad year of 2022. And that was despite the fact I got absolutely smashed on a couple of Russian miners that really sort of impacted on that year as well. So it's kind of interesting. You can see more or less, again, keeping up with the S&P 500 and considering, I'm averaging 6.99 and it's averaging 7.33. Like, even if there was at the end of November a slight underperformance, I don't have to pay ETF fees, or at least traditionally I wasn't paying any ETF fees. I do now have obviously a reasonable weighting in ETFs in my portfolio. And again, like, when I actually sort of plug in some hypotheticals of how I'd be performing if the pound was sort of at $1.20, especially where I think it shouldn't be above, then we're actually quite comfortably beating the S&P. If I actually look at sort of just the live financial impact in my current positions, then I'm basically tied with the S&P 500. So again, I feel actually quite good considering I'm just only slightly underperforming the S&P 500, and again, quite comfortably beating the All World and the FTSE 350. I also kind of think it's interesting that when we go up to here and see our sort of performance over time, you've got the FTSE 350 here, which is kind of plugged along relatively well. And because it had high exposure to sort of commodities and financials and a few other things that performed well last year, it actually held up better than all of the comparisons. But since then, it's kind of flagged a little bit, more or less for the same reasons. Like, financials at the moment are a little bit beaten up, commodities are a bit beaten up. The defensiveness that sort of saved it last year and actually meant it overperformed, especially the FTSE 100, is no longer there. And lastly, because it's a strong pound, and so many of the FTSE 100 in particular, which is obviously the majority of the FTSE 350, a lot of their earnings are international. So when you then translate it back into pounds, it basically goes less far, right? So UK companies are doing less well as a result of a strong pound, as opposed to US companies, which are actually benefiting from this position. So it's kind of quite nuanced, and a lot of people sort of have flagged the fact, if you're a UK investor, you're getting quite beaten up on foreign exchange at the moment. This is something that actually like ISA investor has spoken about before. Like, yes, that's definitely true, but what you're probably overlooking as a UK investor is that the US companies are actually performing really well because of this translation into dollars from their overseas earnings being a bit weaker, especially against the pound. So I think like the foreign exchange movement is one of those things that I got into quite quickly when I started investing. I find it genuinely interesting. And it's interesting as well to see it sort of rippling through in this regard. For me personally, though, the impact that it has is against the benchmark of the S&P, because obviously the S&P itself rises and falls, and that's influenced by currency. But in the short term, certainly the comparison is there, and I'm being negatively impacted by it, and the S&P is being positively impacted by it. So it's kind of makes this bar difficult to keep up with. But honestly, again, I'm kind of looking at this graph and everything that's happening and remain pretty happy with our performance to date. So again, that's part of the purpose of this video, is to kind of keep me honest and focused, and everything else. So basically is doing the job as we'd expect. Anyway, that's everything for my portfolio. Let's have a look at how we're performing with our, let's call them, lifestyle targets. All right, so in terms of this dashboard, I'll start in terms of the wealth. Did a couple of things this week. So first of all, the number here of rose £100. Every month we basically pay into Aurelia's junior ISA £100. So £1,200 per year. Now, in fairness, that is way below the 9,000, and even though we definitely struggle to hit 9,000, we could definitely do more than 1,200 a month. The thing is, though, like, me and my wife just don't want to be frank. Like, she's our daughter's going to get sort of around 40,000 when she's 18, and we just think that's enough. Basically, like, we don't want to kind of spoil our daughter. We think it's important that she has some adversity and challenges. And I think £100, like if I was to be 18 again and get 40 grand, I'd be absolutely delighted. We are working on some options around like how sensible she is with that, and maybe we'll top it up if we feel like we're going to have a very sensible daughter. But right now it's too early to tell. I also updated my wife's current work pension with Legal in General. Just basically made it a lot more risky. It was on sort of a very blended sort of 60-40 with bonds and everything else. It's hardly YOLO. It's kind of 70% sort of developed world's ETFs, but all stocks now, and then there's sort of 15% in basically high risk and 15% in small caps, which I would class as reasonably high risk as well. They're global small caps, so there's that as well. So we'll see how that shapes up. But yeah, basically if I did a blended average, like 7 was the riskiest and 1 was the least risky, and it's at like 5.3. So again, it's a little more risky, but it's hardly insane. In terms of outstanding at work, I mean, really good news this week was that my new system went live on Friday. I mean, I was super busy doing various planning for it, which is why I guess some of my other stuff toward the bottom of the list didn't do so well. But I'm absolutely delighted by this. It's been delayed quite a few times, but now it is live. It's going live in 3. Well, phase 1 is technically going live over a couple of phases, so I guess it's like 1A, B, C, and but effectively one of our 3 sales channels is now going live, and so far things are ticking through the system. The work that I do in sort of billing and payments means that there's a bit of a lag in terms of making sure that this stuff works. But we've tested this within an inch of its life, so hopefully as stuff comes through, it'll go through nice and easily. But I must admit I'm slightly nervous, but we will see. Next up we've got phase 2, and then next year we'll have phase 3 as well, where we'll basically be doing additional stuff into the system. So it's not like, I mean, this for me is like a kind of 1 year project from start to finish. So it's exciting, and I'm really pleased that that's now live. Similarly as well, revenue assurance targets are going really great. We're basically making a very material contribution to my company's financial targets, which feels awesome. And the people in that team are doing a really good job as well. I've actually got a meeting with our CEO on Wednesday just to update him on the numbers, so that should be good. But I'm really pleased with how it's looking so far. Then our propensity to contact reduction, which is basically a cost-saving initiative. So we're sort of in the process at the moment of, I guess, professionalising our slides. and basically giving updates as to how certain projects are doing. Again, I'm slightly just watching what I'm saying because I don't want to sort of say anything that's too sensitive or controversial, or sorry, confidential. But yeah, effectively, we've reviewed the reasons why customers contact us, and now it's our job to sort of remove those. So for example, if a customer needs to contact us to update their DD details, the direct debit details, what do we do to basically automate that process, right? I mean, some customers will always contact you by the phone, but ideally you want the customers to self-serve, especially because our customer demographic is very young, very modern. We're basically a London-focused business. So we have a very engaged demographic, basically, that would be happy to do this stuff if we just gave them the tools to do it. So there's some cool stuff going on there. I've more or less finished my team organisation now. I've got my final person starting on Monday, and then I'm just doing a couple of sort of salary changes and job promotions, effectively, title changes. I've done quite a few already as part of my shake-up since I've started. This should be my final few things. And I'm also in the very early stages of working on my budget for the next 2 years, just in terms of what the future will look like once the stuff like, all the systems are live and we simplify our technology stack, etc. So that's cool as well. And then lastly here, the end-to-end data reporting. Again, still a work in progress. I had a chat on Tuesday with 2 of the people who were going to basically be leading this, and basically everyone's super excited about it. The main guy is kind of a bit of a veteran, so I'm kind of trusting him to do his stuff, and he's basically got until the end of the year to do it together, and yeah, it should be awesome. So I'm very excited to see how that shakes out over the next sort of 6 months or so. In terms of attending gym, I did 2 sessions this week, which actually I was quite happy with, even though I did them at home because I was feeling a bit rough sort of Wednesday, Thursday. My daughter, basically all of us got sick, just kind of a mild cold. My daughter especially got quite ill. I got modestly ill. I did take a day off work. My wife sort of got just a smidge ill, but just basically powered through, so think of that what you will. But I was still reasonably happy. In terms of my weight, I remain at 105. Honestly, I'm eating fairly well. I'm doing a lot of cooking from scratch. I mean, I made a pasta. I didn't make the pasta, sorry. I made the bolognese from scratch. I just cooked the pasta today. And during the week, I've been basically making a bunch of meals and salads and sides and all the rest of it. So that's been pretty good. And also I've been snacking a lot less than I have, which I'm quite pleased with as well. And then in terms of taking care of myself, again, mostly good. I've been sort of, I got my skincare products delivered, so that's, I've started using them now, which is honestly the first time I've ever had sort of proper skincare. I feel like it has had some impact in the fact like my face feels smoother. You can't really see any difference yet, so I'm hoping over the next, like they tell you need to do it for like 4 to 6 weeks to see a more noticeable difference. So we'll see how that goes. But it does feel quite nice just to sort of splash myself in the morning, shall we say. My sleeping could definitely be a lot better. And yeah, as I mentioned, I got a bit ill. I also think like I've been procrastinating a little bit for no obvious reason. I think it's just like trying to get going on a few different topics. But again, I think it's just important that I call that out so that I can address it. Again, that's the purpose of this dashboard. In terms of family, we went swimming last weekend, which was awesome. We do floats and stuff and basically just take our daughter swimming. I'm a very poor swimmer. My wife is kind of average. But in fairness, it's like a metre deep pool, so there's no danger there. And it's just about giving our little one some confidence. So that was good. I didn't do anything extra with sort of family, friends, or professional outside of work. In fairness, though, again, all of my focus was on work, and because I missed a day's worth of work as the system was going live, I was also extremely busy on a number of areas. So that was, I don't feel too bad about that stuff. Where I do feel a little bit bad is that I didn't do a midweek video. I did actually plan on doing one on Wednesday, and I'm hoping to do one next Wednesday, basically to talk about some stuff I got through from Nutmeg, which I think is worth talking about. It's about investments, and this is the company that basically managed my pensions. So yeah, I think I'm going to do that next Wednesday, but obviously again, I got ill, so I just wasn't in the mood to do it. Likewise as well, I sort of want to more structurally start studying some Polish. Wifey has been sort of pulling it out just to sort of test me and my daughter a little bit, and again, it's clear that we're a bit rusty. Similarly as well in terms of publish a story, but I've given myself quite a couple of months here to get myself together there, so that's fine. And then in terms of regular reading, I did take a book, and I'm nearly finished my 3rd book for the year, and I've got a fourth book now as well. But actually, although I took it out several times, any sort of free time that I had, like including earlier today when I was out and about, I just basically enjoyed a bit of like switching off from technology and actually just kind of enjoying a drink and actually just thinking or not thinking. I'm not even sure really what it was. So I didn't actually do any reading, but again, I didn't feel too bad about this one because the whole point of this is really to broaden my mental faculties, I suppose, and actually just being able to give my brain a little bit of free thinking time felt good in its own right. So again, I'm hoping in the medium term here that I can maybe do a book review or two and sort of share some books. Like, I mean, of the 3 books I've read this year, I've actually enjoyed all. They've been quite different. So yeah, I think there's probably some value in sharing those, which is my sort of aspiration for this point where I feel really good about it. But that's everything so far. It's been a bit of a mixed week, to be honest with you. It's a bit work focused, and then the illness just kind of threw out a couple of things as well. And again, it's slow going in a few of these areas as well, which I hope to improve in the medium term, but we will see. Anyway, that's everything I've got for this week. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing and everything else. Bye for now.